Good evening, Ira Epstein, and here we are with your financial market wrap-up, and this wrap-up is for Monday, the 13th of January, 2025, and our time factor now about 6:15 p.m. Central Time. So as I look at how the markets are doing and how they're trying to work itself through, we have data coming out tomorrow. Maybe the market's seeing some short covering tonight in front of it. We get the National Federation of Independent Business. They're going to come out at 5 in the morning. They're looking for a 101.7 figure. In December, they had 100 numbers, so that'd be an improvement. December producer price indexes, corn regular, come out tomorrow at 7:30. Market's looking for an increase of about 0.3% in both of those. And Red Book will come out with their retail sales, and that'll be tomorrow morning at 7:55. And that's the weekly sales. They've been running about 5.5%, near 6%. So strong numbers that we had been seeing. Now, I have done a special report for everybody, and this is on the currency markets. And I did it specifically on the dollar index because of all this coming up. What's it going to do, the dollar, as Trump takes office? What about the PPI, CPI numbers? How are they going to impact things? So I went with the seasonal charts and QT. So I give you the bigger number. If you'll recall, just recently I've been calling for a move to the 109.80 level. We got there today, so I felt very good about it. How do you get the report? Just go to our website, iraepstein.com. And when you look at the site, look at the top left, you'll see the special metal report. It's all lit up for you. You can move your cursor. There'll be an icon up there. Grab it that way as well. So let's go back, if we could, now to the charts and start diving into them and see what we've got. As we look at the S&P, one of the things I've been pointing out is if it was going to break down, I thought you might develop a battle at the 18-week moving average of closes. That number is 59.10. You're 58.90 right now. So you're in that zone. That's pretty much what the market is doing. You made the lowest low of the whole break today. You rallied back, closed higher, and you're getting a little bit of a pop tonight. But that doesn't change the trend. The trend is down. You have lower highs, lower lows. When you look at the moving averages, you're under them. You're under the 100. So that would be logically, if you rally here, the first resistance point. And if it keeps going, I'd say the second one's around the 59.80 level. But the market's in a bearish phase, not a bullish phase. It went down, hit the Bollinger Bands today and Friday, and zipped right away from it, as you'd expect. It did the same thing back here. This was the area where it got under it for a couple of days fighting, but eventually it popped back in. So now what had been ideally support, which is the combination of the Bollinger Band right here and the 100-day average, and it proved itself on this day, because if you come back there, you'll see the market did, let me bring you right to it, it stopped there. So when you look at that, you say, okay, now you break through it, and on the way back up, does past support become resistance? That's the way that I'd approach it. In terms of momentum, you're oversold, so you're in need of a correction to get rid of that. You either embed, where both numbers get under and go sideways under 20, or you get a bit of a correction. I think the correction phase is what's being attempted. When we take a look at the NASDAQ, today, you hit the first time the 100-day average in the Bollinger Band, snapped right back up like that. Again, oversold. Again, you're in a bear trend. You still have this market pointing down. In the Dow, first move up into the Bollinger Band. Had your late day reversal, getting that. But I think this whole area is going to be sold by the pros between 43,278 down to the 43,018 level. So that's where I'm looking for the resistance to come in. And in the Russell, you're in corrective territory. You're down over 10% from the high to the low, which is the definition of a corrective territory. You haven't really done that in the other stock indices. So the first battleground should be right where the market's at tonight, the 200-day average. Rallies, I think, into the 18 and the 100 are more aggressive where the market will be sold. It's very difficult for me to tell clients to go short when the market's flashing oversold conditions. There's no reason to be long, but there's plenty of reason in all three to have covered, actually all four, to have covered short positions. In the 10-year notes, as long as you have the embedded reading, I look for the market to stay in a bear trend. That does not mean it pushes through the Bollinger Band and just goes crashing down. I'm not expecting that. It could happen, but I'm not expecting it. I'm looking for resistance back up at the 18-day average. Same thing going on in the 2-year. But unlike going back here to the 10, this was embedded. You're not embedded in the 2-year. You're just oversold. So the 210 is, again, giving you the idea being the 2-year, doesn't want to keep adding as much yield as the 10-year easily does. In the dollar index, I'll let this go. I'm going to let you tonight go look at the report. It's really important, and then we'll pick things up after that. In the eurocurrency, market's coming down, and as you can see, you came into the Bollinger Band getting a bounce. Now, this is the lowest low we've recently made at 102.04.5. So cross through that, you start getting to the 101, and eventually you'll hear all this talk about parity if the market gets there. When you see my dollar report, and you see that we're at the second flip that I had talked about, getting to 109.80, I wouldn't be surprised if you now do a bit of consolidation. And that can lift this up a little. The dollar hopefully consolidates. Does it have to? No, because we don't know the impact of what President Trump's going to sign and the effect the market will have. Whatever the bills he signed will do. We have an idea. None of that sounds bearish to me on the dollar. British pound today got under the 121 level. Over the weekend, I was reading reports as to how many traders are placing sizable bets that this market's going well under the 120 level. They're doing it with some option plays. Interesting. But you hit the Bollinger Band. That doesn't mean you don't get a bounce away first. Is the market going to embed? Well, you can't count the levels tonight because we don't know where they're going to settle for tomorrow. But both numbers on Monday's close, they were under 20. When you go to Friday, we were under 20. Were we there on Thursday? No. So tomorrow decides what it's going to be. Most of the time you don't embed, so I wouldn't be surprised if the market tries to avoid doing that by getting something of a rally going. Doesn't mean a trend change. Look where you went down to in the Bitcoin. That's your lower Bollinger Band. You went right to it, held like that. You did the same thing back here and here. Long-term traders, forget trends. This is where they probably stepped in. Remember, we got all the way up and now we have fallen all the way back down in this market. This is one of these markets where I'd be extremely cautious. It is a market looking for a floor. Traders are looking for reasons to be long. I don't see it. I see a market that got short covering. That's not the same as reversing the downtrend. In the energies, it's just been a runaway since the Biden administration put the sanctions on Gazprom and 183 tankers that carry Russian oil, another one of the Russian companies, and they're cracking down on what Iran does. So what the market will do is the punishment's on Russia, not on OPEC. Russia. I'm sure Saudis, Kuwait, other countries are waiting there to pick up the business. So I hate when this happens for a reason. This is not a market being driven up necessarily by demand. It's lack of one of the supply sources, but there's another one waiting right behind it. Not a fan of chasing markets over Bollinger Bands or when that happens, but the trend is certainly locked in on WTI and the Brent and the heating oil market, and the cold is happening, and that's helping all the energy parts of it, because we are sitting here now in the Midwest and parts of the East, and we're not going to get above freezing but one day, they say, in the next 10 days. So this is cold by any stretch, and it's lasting, which means your heating bill is going up, your natural gas consumption, whatever you heat your house with, the energy use, it's going to cost you more money because of the severe cold. And it is cold. It's a lasting cold, too. I see the Chicago, they're talking through, not this weekend, the weekend after. So they're looking 2 weeks out. It is a weather forecast, that they change on a dime. So you put this together, you can see that the upper Bollinger Band is stopping the rally in the nat gas, but not stopping the uptrend. The market's in strong demand, and now that they've cut off natural gas flowing through Ukraine to some of these central EU countries, that demand has to be picked up in other places, which is what's going on. So you put it together, come and join me, and go to our website, iraepstein.com. It's that simple. And you'll see the metal report, the currency report. It's going to impact the metals. That's on my brain for whatever reason. I think I said the same thing in the other update. In any case, I'm Ira. I will catch up with you all tomorrow morning. You take care.